Every decade, a few companies dominate headlines, portfolios, and investors' dreams. Today, we're going to be talking about a shift that might be coming in the new era of AI. But first, let's go back to the 70s. Most of the hottest stocks have faded away. And today, we seem to be having a shift from the MAG 7 to the MAG 10. I'll break everything down. Let's flash back to the 60s and 70s when the Nifty 50 led with names like IBM, Xerox, Coca-Cola, and McDonald's. Valuations were high, sometimes over 50 times earnings because investors believed in these stocks so highly. Then in the mid 70s, reality set in and there was a crash. The lesson learned, never overpay. Even great companies can disappoint when expectations are extreme. The dot-com era came in the late 90s with Cisco, Yahoo, and AOL leading the pack. The NASDAQ index skyrocketed and then crashed by 78%. Cisco, one of the biggest names of the time, barely survived. Lesson learned, innovation is great, but earnings and real profits matter more. Next up, around 2010, we had the FAANG stocks: Facebook, Apple, Amazon, Netflix, and Google. This group had something that the dot-com names didn't: real value, global scale, and profitability. They were staples in our ETFs, those exchange traded funds, and were driving most of the S&P 500's returns, showing us that the key to long-term success isn't just momentum. It's maintaining a competitive edge that protects profits. Then by 2023, the MAG 7 were the industry leaders with Apple, Microsoft, Amazon, Google, Meta, Nvidia, and Tesla. These seven drove over 60% of the S&P 500 gains that year. Their power came from trends in AI, cloud computing, EVs, and semiconductors. But with this group of stocks, market concentration brings both risk and reward. The dominant companies drive massive profits, but they also are more exposed to regulation, competition, and market shifts. So I'm Lisa J. Stocks. I hope you're enjoying the video so far. Don't forget to like, subscribe, and hit that notification bell. So now, in 2025, we're seeing a shift from the MAG 7 to the MAG 10. This shift signals a broader view of what's leading the AI revolution. We're seeing the importance of chips, cloud computing, overall, how important the AI wave is becoming. So this is nothing broadly recognized yet, but we are seeing an expansion being recognized by Wall Street. There is even an index that is already focused on futures and options related to this new group. In addition to those MAG 7 companies, they're adding Broadcom, Palantir, and AMD to the mix. Why these three companies? Because they have huge market caps, high liquidity, as well as key roles in powering AI infrastructure. Let's start with Broadcom, ticker symbol AVGO. Year to date, Broadcom is up 50.68%. Their stock price has been boosted by talks of buying parts of Intel's design business. This move could strengthen its CPU market position and expand its semiconductor product offerings. Just the rumors and speculation have contributed to the stock price moving up. Now let's take a look at Palantir. Year to date, they're up 135%, down on the week, and up just 0.67% on the month. There have been some defense spending concerns over the past year. But when it comes to Palantir, they did just land a $385 million VA contract, showing strong government AI demand. And then AMD, Advanced Micro Devices, year to date, it's up 92.96%. This company is tied to Intel. When it comes to Intel's licensing rights, especially around architecture and chip patents, those are significant assets that Intel holds. So if they're able to break apart parts of their business, those rights could be bargaining chips, giving it influence over any acquisition or partnership. Eyes are on AMD to see if they will be negotiating any strategic partnerships in this evolving chip space with other big names like Intel and Broadcom. So let's take a look at what all of these big names are bringing to the table. NVIDIA, the leader when it comes to AI, powering data centers and partnering with names like OpenAI and CoreWeave. Microsoft, one of the US's largest companies, putting significant amounts into AI infrastructure. Apple, who just put out the new iPhone 17 and is striving to make those new AI upgrades for Siri and Apple's smart home platform. We have Google that's bringing us Gemini AI and custom TPU chips and getting on track to be potentially a $3 trillion company. Amazon has its AWS, Amazon Web Services, as well as growth when it comes to retail. And analysts are giving it a $300 price target. Meta is building Llama AI and is another company that's expected to be bringing in significant AI revenue by 2028. Tesla striving to make advancements when it comes to self-driving as well as their robots. And analysts also see the potential of that company moving up to over 2 trillion. And then those new names, Broadcom, their AI chip revenue is up 63% year over year to 5.2 billion, surpassing market expectations. Palantir is leveraging its AI platform to expand its commercial products with a $10 billion contract secured with the U.S. Army, having them on track for significant growth opportunities. And AMD is developing new chips. They have a partnership with OpenAI, and their stock price has more than doubled since April. So we have to have our eyes open to what are the current industry leaders and not be stuck chasing yesterday's winners. I do happen to hold some shares of all of the Mag 7, but I can't invest into everything. So I have to decide what positions I want to take the time and effort to build up, that I'm ready to make that commitment to hold long term. But you can always diversify with a low cost ETF, whether it's broad diversification through something like VTI or a fund like QQQM for more focused exposure, or even a fund that is concentrated on those semiconductor companies. Do your research on the ETF's holdings, expense ratios, and how much they lean into those big tech names that you want to have exposure to. Let's continue to stay informed and stay on top of the valuations of the companies that we hold in our portfolios. Before we wrap up, coming up this week, we have Tesla's earnings. Analysts expect growth from new model launches as well as battery expansion. Investors are watching for guidance on EV market share and margins. The stock has been moving sideways lately, reflecting cautious optimism ahead of the results. When it comes to Tesla's earnings results, we never know which way it's going to go. For example, Q4 2023, they beat when it came to earnings, but the share price dropped by 12%. And then in Q3 2024, they also beat and their share price was up by 22%. So be careful if you are a trader when it comes to Tesla stock. A few other big names having earnings this week. On Tuesday, we have Netflix, Wednesday, IBM, and Thursday, Intel. So let's continue to strive to be winners when it comes to our investments. Understand the cycles. Don't chase hype. And it's okay to rely on ETFs as our foundational investment, or for some, our entire investment strategy, because you can definitely build wealth in that way too. You're getting exposure to the same companies. It's just a matter of finding the one that's a right fit for you, giving you exposure to the indices or sectors that are in line with your goals. Of course, at a low cost. Be mindful of those expense ratios as well as the performance. Make sure to leave me some comments. Let me know your thoughts on this shift to the new Mag 10. Are there other companies that you think will officially be a part of the Mag 10 as opposed to Palantir, AMD, and Broadcom. If things continue to shift and there is a more official recognition of a larger group of industry leaders. Remember, do your own research, and nothing I share here is ever a suggestion for you to buy, hold, or sell any particular investment. Thanks for watching. Okay, bye.